What's up, everybody? It's Richard here. Today we're diving into why Disney stock could be your ticket to long-term success. We're going to look past the headlines and get into the fundamentals of what makes Disney a potential powerhouse for investors. Think of this less like a stock market lecture and more like the story of a global empire that's constantly evolving. We'll unpack 5 key reasons why Disney, ticker symbol DIS, might be one of the smartest long-term plays right now. Let's begin. First up, diversification. Disney isn't just about Mickey Mouse or theme parks. When you invest in Disney, you're buying into a whole ecosystem: parks, movies, TV, streaming, and merchandise. The parks, experiences, and products division thrives when travel is up, but when it's not, other segments step in. Media and entertainment distribution, think Marvel, Pixar, Star Wars, ESPN, keeps revenue flowing even when parks are closed. Disney Plus is their answer to the streaming revolution, and merchandise turns every character into a revenue stream. Each segment supports the others. A hit movie drives merchandise and park attractions, while parks boost brand loyalty and streaming subs. This integration creates a safety net. When one area struggles, another often thrives. Disney's diversification makes it far more resilient than companies that rely on just one thing. That's why it's a masterclass in building a stable, long-term business. The synergy between segments is Disney's secret weapon. It's not just a company, it's an ecosystem. That's diversification done right. Let's move on. Next, Disney's brand is its greatest asset. It's a global symbol of quality and magic, trusted by generations. This trust gives Disney a massive competitive advantage, a moat that's nearly impossible to cross. People pay a premium for Disney because they know the experience will be top-notch. The brand's power means Disney can raise prices and still see strong demand. Globally, Disney resonates everywhere, from Tokyo to Paris to Shanghai. As new markets grow, Disney's brand opens doors for expansion. This loyalty creates a cycle. Movies drive park visits, parks drive merchandise, and all roads lead back to Disney Plus. The brand is the foundation of Disney's long-term success. That's a moat you can't replicate. Now, let's talk about streaming, Disney's future. Disney Plus launched in 2019 and quickly became a streaming powerhouse, reaching subscriber numbers that took Netflix a decade. Disney's content library and competitive pricing fueled this explosive growth. Disney Plus isn't just a product, it's the digital hub for all things Disney, Pixar, Marvel, and Star Wars. Add Hulu and ESPN Plus and Disney covers families, adults, and sports fans. Bundling these services creates value and makes it tough for subscribers to leave. Disney is focused on making streaming profitable, raising prices, adding ad tiers, and cracking down on password sharing. The goal, a recurring, high-margin revenue stream that's less vulnerable to economic swings. Streaming is now the engine powering Disney's next decade. The company's digital pivot is working. Let's look at what fuels it. Disney's content library is its treasure chest. From Snow White to Star Wars, Marvel to Pixar, Disney owns some of the world's most beloved stories and characters. This IP powers every division: movies, parks, streaming, and merchandise. Disney is a master at reimagining its classics, sequels, spin-offs, remakes, and theme park attractions. Unlike competitors, Disney doesn't need to spend billions every year to create new hits. It already owns a century's worth. This gives Disney a permanent cost advantage and endless ways to monetize its stories. When you invest in Disney, you're buying a piece of Iron Man, Elsa, and Luke Skywalker. The content library is a perpetual revenue machine. As long as people love great stories, Disney's IP will keep delivering. That's the fuel for Disney's growth. Now let's talk resilience. Disney's history is a masterclass in resilience. The company has survived the Great Depression, World Wars, oil crises, and the 2008 crash. When the pandemic hit, Disney pivoted hard to streaming, accelerating its digital transformation. Bold moves, like acquiring Pixar, Marvel, and Lucasfilm, reshaped the company and secured its future. Disney's leadership isn't afraid to take risks and adapt. Every challenge has made Disney stronger and more innovative. This adaptability is baked into its DNA. For long-term investors, Disney's proven ability to weather storms is invaluable. It's not just about surviving, it's about thriving. That's why Disney remains a dominant force. So, those are the 5 reasons Disney stands out for long-term investors: diversification, brand power, streaming growth, unmatched content, and resilience. Of course, do your own research. Every investment carries risk. What do you think? Are you bullish or bearish on Disney? Drop your thoughts in the comments. Thanks for watching. If you found this valuable, hit like and subscribe for more deep dives. I appreciate your time. Until next time.